This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, November 6th, 2015. Euro dollar. So the euro has come back under some pressure over the past several sessions, with the market now trading down into some critical support, some medium-term support in the form of the July base at 108.09. But if we look back several months, even before 108.09 in July, the market had traded back down to those levels back in May around 108.20. So clearly 108 comes in as a key support level, and if the market can close below 108.09 on Friday, this could open the door for the next downside extension back towards that multi-year low from March at 104.62. At the same time, if the market does bounce out from current levels, look for previous support now turn resistance into the 111 area to cap gains. Ultimately, the downtrend remains firmly intact here, and rally should be very well offered. Sterling dollar. So sharp setbacks for cable on Thursday, with the market trading all the way back down below some key support that had been in place around 152.40. Overall, the market continues to show a downtrend since topping out in 2015 at 159.30, making a series of lower tops and lower lows. Look for a fresh lower top now to be in place at 55.10 ahead of the next downside extension to be confirmed on a break below those recent lows that we saw going back to late September at around 151.07. Dollar yen. So dollar yen is traded up to some critical resistance right now, even taking out that key resistance at 121.74. But it will be interesting to see if the market closes above 121.74 on Friday. Inability to do so will keep the pressure on the downside for a move back down towards recent lows in the 118 area, and then back down eventually through the 118 area down to the August low at 116.12. Again, a close above 121.74 on Friday will negate and open the door for a fresh upside back towards those key highs that we saw all the way back in June, which came in at 125.85. Euro Swiss. So Euro Swiss hasn't been doing much over the past few months, although the market is locked within a broader recovery structure, and as such, this consolidation is favored to break to the upside beyond the highs that we saw going back to September at 110.50 and towards 112 further up. Any setback should be very well supported ahead of 107, with only a break back below 107.14 to compromise this outlook. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market has recently stalled out ahead of 74 in favor of what could be the next downside extension back towards and eventually below those recent multi-year lows that we saw in September, just ahead of 69. Dollar CAD. So dollar CAD looks poised for a fresh push higher back above the recent 11-year peak at 134.57 that was set in September, and potentially this could open the door for the next major upside extension towards the 140 area. At this point, setbacks should continue to be very well supported above 128, with only a close back below 128 to negate this outlook. Kiwi dollar. So Kiwi is stalled out into the recent recovery rally all the way up just shy of the 70 area, stalling out around 69, and it looks like a lower top is now carving out ahead of the next major downside extension back down towards the multi-year base in the 62 area from September and potentially below that. SPX 500. So the S&P 500 has traded all the way back up above 2100 in recent trade, trading to less than 1% within the record high from May at 2137. At this point, the market is showing signs of exhaustion, but we'll need to see a break back below recent lows at 2070 to confirm this exhaustion and open the door for an acceleration of declines, while at the same time alleviating immediate topside pressure. Inability to close below 2070 will keep the pressure on the top side for a retest of that 2137 record high.